Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
I'm Carol Massar along with Tim Stanovic. Let's take a look at some stocks on the move today. With us is Bloomberg News equities reporter. We've got Natalia Kanijevic. She is here in studio. And let's talk about IPOs because we had a couple out today, and that includes one that's been going through some changes as of late.
Exactly. So this is NIQ Global Intelligence. The ticker is NIQ. The stock is down by 8%. This is the first day of trading. It was a really highly anticipated IPO because it's a private equity-backed company. It's a rare exit so far this year, and it was pretty well received among investors based on our reporting. And I don't know how to explain the stock price reaction. I'm not going to go into this, but overall, the IPO was priced at $21. The range was between 20 and 24, so it's a lower level of that range. The company's market value is about $6 billion. So NIQ Global Intelligence, the company that was founded in 1923, it has a very long history. At one point, it did television ratings, and people know about that here in the U.S.
We used to live and die by Nielsen ratings. Haven't for a long time.
Then it was separated. So now there are two completely separate businesses. NIQ provides customer intelligence, and it has a really solid portfolio of clients, including Amazon, Target, Walgreens, global brands like Sony, L'Oreal. Basically, it helps them understand consumer behavior a little bit better, and then, of course, target those consumers when it comes to marketing.
I wonder, our reporting says the top 25 largest investors in the deal were allocated 70% of the shares. And I'm just wondering, is that normal? Is that typical? And I'm just wondering if there was maybe that is why I don't know. I'm trying to understand why there's some downward momentum because that's a pretty big drop.
Typically, when we have long-only investors interested in the deal, it's a very positive sign. It means that people will not be selling the stock after the lockup period expires. But now, I don't know, maybe it's like a more broadly some kind of market turbulence and maybe some kind of frothiness. And again, keep in mind what kinds of IPOs do well in this environment. It's crypto, first of all, right? Sometimes fintech, technology, AI-related stuff. But this company, the end user is consumer, but at the same time, it's a software company because it provides and also 80% of its revenue is recurring, which means that the company has a stable cash flow.
Yeah, some visibility, right?
All right, so that's consumer intelligence. Let's talk a little bit about energy technology. Baker Hughes on your radar.
Baker Hughes, the stock is one of the best performance today in the S&P 500 index. It's up by 11.2%. The company posted better than expected earnings results, mainly because it has a diversified portfolio. It's not just a typical oil player. We know that we have so much volatility in the oil space, but it also has exposure to gas. More specifically, they supply modules for LNG terminals, gas turbines, and with all this excitement about AI and data centers and demand for energy, this is where Baker Hughes is winning. Just to compare, for example, Halliburton, this is more like a pure oil services player, US-centric, and we see that the stock's performance is not doing as well as Baker Hughes. So it's a big win for the company.
What goes up might go down. What goes down might go up. I was trying to make a transition. It's a little lame. It's a little lame.
No, it's not about transition. The company that actually invented the escalator.
I know.
You're talking about Otis.
Otis, the ticker is OTIS. The stock is down by 11.5%. Here, this is why it's an interesting story. It's a global company and it has a global exposure. Mainly, it posted larger than expected drop in new equipment sales. And as a result, this elevator maker lowered full year guidance. New equipment sales declined by 10%. CEO said that mainly, this can be attributed to some challenges in China and in North America. We also saw some declines. To analysts, specifically JP Morgan, they said they did not expect such a big decline in operational guidance. So this is where we see that it is a little bit like consumer sensitive, tariff sensitive business. And despite the fact that so many people are saying, yeah, maybe, tariffs is not
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.